All right, it's Friday morning, 4/11/2025. All right, we're going to cover a few trades here using the Fibonacci tool. So again, this is continued Fibonacci education, and want to teach you guys where these entries are because they give you very, very good trades. And again, how to set this up for just maximizing your success with this. So I'm watching the chart. I see this downtrend happening, and then the market suddenly shifts. So I was looking for sell entries. I saw our lines getting closer together here. I knew the potential was we might be pushing up. So it did. It crossed up over our white ray. Let me delete this for confusion. Here's our trend ray right here, the white line. Market closes above. On the first one, it just wicks. Second one, it actually closes. When this happens and you're looking for re-entry, what you want to do is you want to wait for the market to give you a top, okay? So we have a bottom and we have a top of the move that breaks the trend, okay? What you're going to do is you're going to take your fib retracement tool. You're going to go from the bottom, which you're going to go from, I suggest going from the candle, not the wick. You're going to go from the candle. You're going to drag up because now it's broken the trend to the downside, and so now we're looking for bullish moves. So what you're going to do is you're going to drag from the bottom candle that started the move here. You're going to drag up, and you're going to go to the top of the candle body. So not the wicks, but the body, okay? And what you're going to do is you're going to extend right, just like this. What that's going to do is this is going to give you a zone where the market could potentially pull back to give you a trade to the upside, okay? This is the easiest way to do this with Fibonacci. Now for my fib levels, you can see here what I have checked, and really I need to clean this up. I can make it so they're just all right here and they're in a row and they're in order, but screenshot this and set this to your fib levels, okay? You have your two targets over here, 0.5 and 1.5 negative, by the way, negative 0.5, negative 1.5. And then you have your lines right here, okay? So this is how your settings should be. Your 100% should be at the bottom. Your 0 should be at the top with your 50, your 60, your 80 for a potential stop loss level. And then you have your target up here at 50%. This is the most simple way that you can do this and set this up. Big target for 150%, okay? What that means is from here to here is 150% of here to here. So what you're looking for in the market is a 50% pullback of that move that moved this way. Now, if you're not sure why this works, it's because there's something called HFTs, high frequency trading robots. And these are the algorithms that smart money uses, the big money in the markets. So these are the levels that they use. It's part of their trading algorithm. So that's why they're high probability setups. And when the market gets there, we want to see the market react pretty strongly, okay? So we have our zone right here. We're looking for the 50 to 61% pullback for an entry. So let's go ahead and press play. We're going to let the market do its dance here until the market comes down right there, okay? Right here, it gives you a dip into the zone. Right there is your 50%. Here's your buy arrow right there. And you would take your position from this point. Okay, right here, this is what you look for. You should screenshot this potentially. And this is what you look for right there. So that's my buy entry. Stop loss can go down here below the 80. You can adjust your contract size to suit whatever your stop loss should actually be. Okay? Right there. I'm going to risk 1,000. And I'm looking to make 2,700 on this trade. Okay? And this is my target, that 50% line. So I'm risking 960 to make 2,700. And my risk to reward ratio, that puts it at 1 to 3. That's what it should always be. It should be right about 1 to 3. You're going to have a bit of a spread in the market, so it's not always going to be exact, okay? But this is your target. So that's your buy entry, and then we watch the market and we just let it ride, okay? And right there, target gets hit, and then the market does a retracement all the way back down to the level. Now, this is very important. On the previous video that you saw on these levels, sometimes the market comes back to this level and it will reject, and the bigger trade actually happens off this level. So I took another entry here and the market was valid until it closed below right here. Market starts to come back. Okay. And I actually want to just take a pause real quick to see what this trade is doing. And I'm going to also take this trade right now. This is a valid entry for me for what I'm looking for here in the market. There's the initial one. And I'm going to just make a couple of adjustments here. There we go. I'm going to draw another 50% Fibonacci up, and I'm looking to get to right here in the market. Okay? Just like that. And we're going to let that trade run. So again, I have a 50% pullback here on another move, and I'm looking to take that trade down to here. This is a 1 to 3. We're going to set an alert right here to see if this hits the lower low, which means the trend continuation. That's what we should see on here. And we'll just let this go, and we'll come back and check it. So let's back up though, because right in here, there's a trade that occurs that I want to cover with you because this is all fresh and happening this morning, okay? So right here, we had that first one, boom, that target hits right there. By the way, that trade was, we had 500 ticks on that trade. Okay, so it was a 500 tick trade. Market comes back. This one would actually be a bigger move in the market, and we would aim all the way for the 150%. It doesn't give it, no problem. They're not there. The market reverses. And now, even though it's before my sell confirmation, which is now happening over here, okay, this market right here gives me a pullback. So let's mark it up because it goes bearish right here as it breaks below. And this is very important. My fixed range volume profile. This section over here of these orders, this is in the dynamic support and resistance levels. If you look, this is where the market came back and rejected from, and then it rejected again, and then it broke below. Once that happens, the control is back in the hands of the sellers. Okay, so now we're no longer looking for the buys, we're looking for the sells. So it transitioned over here, we look for the buy. Over here, it transitions, we look for the sell. So where would that sell go from? Well, what we're looking for is the top of the move that started the break, and we're going to drag our Fibonacci tool, our retracement tool. We're going to drag it down to the low that gets formed before the market comes back up, okay? So the low gets down, and this market comes back to this point right here, okay? And so now we have a Fibonacci level. Now I'll redraw this one in just a second. We have our levels go. I just don't want to cause confusion, okay? So now I have another retracement level right here. Now, what happens on this is the market, instead of coming back to the 50%, the market comes back to the point of control and rejects off the point of control. And so once this happened, okay, there's actually a couple levels in here. You have a bigger Fibonacci, which it never came to, and you have a smaller Fibonacci, which happened right in here. There was a smaller fib level that happened. Okay, but where this market rejected from was off the point of control here from the left. This is that dynamic support and resistance. So the market rejects off of that level, okay, and it gives us a drop, and the market comes all the way down to hit our 50% target level right there in the market. Okay, so the target hit right there. Even though it never pulled back to the 50, this gave what's called like a 38% pullback. A 38% pullback is a fast-paced move in the market. It means the market is strong and moving fast. So it was a 38% pullback, which also happened to reject off of that point of control over here, which was the initial support right here, which flipped to resistance, and the market rejected and dropped to hit target, hit that 50% target. So there were two really good winning trades in here and one losing trade that we cut very quickly. Okay? Now we're in the third trade. So let's cover this one to see if we can get a continuation to the downside. Market is about to open, so we might get a lot of volatility. So just keep that in mind. But we are selling currently, so it is in our favor. If it does pull back up beyond this level, you'll take a loss, and then we'll look for the next trade. Okay, but the market is in our favor right now. So on this trade right here, this market came from here, from the high, and made a low. Now, if it's going to pull back and continue, what we're going to do is we're going to take our Fibonacci, we're going to drag it from the high of that wave down to the low right here. Okay? Drag it from the high to the low. Here comes the market volatility about to kick in here. Drag it from the high to the low. We're looking for that 50 to 60% pullback. And then from that 50 to 60% pullback, you are looking for the market to then drop and continue on to your 50% level down in here. Okay? So that's the way that you draw those up, the way that it should work. So right now my validation level is at 18,501. You'll see that on here. So if the market gets back above that level, it'll just stop me out here. Otherwise, the trade stays valid for me, and I'll stay in the trade and potentially get that continuation to the downside. So the first minute or two kind of tells quite a bit about the market and where we might be headed. But overall, it's in our favor right now. So we'll go ahead and we'll watch here and see how this Fibonacci trade plays out, with the market open being in our favor for the sell confirmation. Big wick coming in here. Let's see what the next candle does. If the market rejects, then the sellers may take control. And if the sellers take control, we may actually go for the larger move, which would be the 18,156 down here, which I don't even need to get there because my daily goal is 3,000. So we don't even need to get that low, but that would be the target. 18147 would be that level. 18147. So this is pretty close down in here. This has the low there. Oh, I can see what I did. There we go. Boom. Okay. Market is dropping, and so on this particular day, instead of just taking profit, I think this is in our favor, and I think that we give this the chance to be able to run. So especially with a beautiful 50 to 61% rejection right there at the market open off of that 1 minute Fibonacci, we're looking for this market to just continue to collapse and go lower. Okay, there we go. Lower low coming in the market. We are in a downtrend.
A question for you, Graham.
Yep, 1 second, and then I'll answer it. So my downward trend here, by the way, on the PSI in particular, we should be staying below the red, ideally, for a strong trend. Strong trend, we should be staying below the red. All right, go ahead and you can ask your question.
When the market moves in your direction, as much as it's moving right now, would you ever put in like a trailing stop to kind of try to preserve some of that, like on Top Step X?
I don't. I hate trailing stops because they get hit all the time. So my decision is either I take profit at the level that it's at right now, either that's my decision, or I hold the targets or I stay in the trade until that trend is no longer valid. If you do, here's what happens. There's going to be days where if you were to take profit at these levels, for example, where the market makes a lower low, okay? If it makes a lower low, it could turn right around and it could go to the upside, and you could get stopped out and lose all your profits, okay? So that could happen. It could have come all the way back. You could take a loss if you don't move your loss to break even, and you might just eat it and not make anything on it, okay? If you take profit down here, you for sure move your account forward. But if the market continues downward, you sit there with regret and then you start taking sloppy trades. That's what I tend to notice happens for me anyways. Maybe not for everybody, okay? Now, there's going to be days where the market comes down, and right now I actually love the way this looks because this is so typical. It'll make that lower low, reject a little bit, and then you'll get a really nice downward trend that can happen where it can really push. And we love to see that. So after you get that blue candle and you get a few more red candles in there, that can work out really well. We'll see what happens on this one because you can see there's an obvious rejection coming in. But I don't like to do that because you never give yourself the opportunity to hit the bigger trades. And it takes a lot to get an entry in the market and allow that trade to work out. It takes a lot. So when I catch a good trade that's going in my favor, what will happen is a lot of times I'll go break even on it and I'll get stopped out at break. Like right now, I could have gone break even. I would have been stopped out at break even, and then very well this market could come right back to that level, touch that break even level, and just turn around and plummet. And I mean, it happens to me multiple times in a week. So I'll just speak for myself as a trader. What I'm working on right now is taking really good trades and then giving it the opportunity to hit targets, like the full opportunity, not going break even on it, because then you're just, a lot of times the break even is a bit of a waste. And we'll see how it works on this one. I could still lose money on this trade, or it could turn around and come down and hit my first target, right? So I don't like going break even. It's one of the things that I'm changing, because I had just this week alone, this is on Friday, this week alone I had 4 trades that came back, hit my break even level, and then turned around and went for like 1,500 ticks. And I never got back in because it never presented me another good opportunity to get back in. So one of the things I'm working on personally is not going break even, just accepting when I take a trade, it's either win or lose, and not getting paper handed, holding those diamond fists and allowing trades to actually hit levels that we're targeting, and holding to target. Otherwise, if it invalidates, then you get out, right? So right now, there's nothing in here that would warrant me getting out of this trade. This trade is still extremely valid. In fact, it came back up again. It went above my entry level, back to that 61%. And then now it's dropping again. And this time when it drops, it might actually drop with some real fervor. And that's what happened to me, like literally, I think 5 times this week, is I got stopped out on these. So for me, and I can't speak for everybody, but for me, in doing this for, I don't know, 5 years full time now, what I have noticed is that it seems to be more profitable to wait for a really good entry and then allow your trade to play out with either a stop and target levels. And as long as your trade stays valid, you stay in the trade, and you don't paper hand it and get psyched out or freaked out because it's not doing, what you think it should be doing, which frankly, the market doesn't really care about where your entry is. It doesn't care about where any of your stuff is on the chart. The market is going to do what it wants to do because it moves based on the algorithms of smart money. And smart money's job is to take your money. The market is designed in order to not let you succeed. So when we position ourselves to trade like smart money, we're going to take smart money setups, and we're going to have a lot greater success in the market, in my opinion. So we'll see what happens on this one. This one right now, if this doesn't make a lower low, it could be throwing a head and shoulders where from this 0% line, we could see the market reject with a bit of a Wyckoff accumulation down in here, which we can see like pretty easily. It comes down, comes up, makes a little bit of a lower low, recovers, comes back down, rejects, starts to come back up. So this could result in a loss. The market could turn around right here, and then from there, the market is going to give a very large move to the upside, and then we'll look to make our money on the upside, which is what it looks like it's going to do. I'm pretty sure that one stopped me out. So that one hit my stop level. This trade for me is no longer looking valid. We've already gotten way up above here. And so now what I'm going to do is I'm going to look to trade that Wyckoff pattern, which was that nice double bottom here. We should see this kind of move to the upside, and probably is going to give the trades on the 10 seconds. So let me zoom out here on the 10 second. We're getting above these levels, yeah. All right, so I know exactly what I want to trade on this one. So as this gives us these pullbacks, we're going to be looking to hit this to the upside, because I think this is going to move with some fervor here. And hopefully it doesn't just come back into consolidation and trap everybody out. I'm going to draw up my fib on the 10 second here. And this is early. This is still just first potential wave. Did we break the trend on the 1 minute as well? We did break the trend on the 1 minute. Now we have our level from here. Right back down into the zone. I'm going to mark up these areas because I think we're about to get a really good trade here. Okay, so back down into this zone, and I'll even mark up the fixed range. Well, I got to do this quick because it's coming. Okay, first entry is going to be here in the market. So first buy entry is here. Just in case the market wants to take off. Potential entry right here at the market for a buy. That is the that's the point of control there. On the 10 second, let me see what this looks like, where these levels are. Otherwise, the market might give a... yeah, the 10 second is not going to give the valid move. We'll see if this one works out. So we could be coming back down here to test this. We're looking for the rejections at these levels here. And then we're looking for the continuation to the upside. Otherwise, it's going to live true to its name here today and be a trap day, which I won't trade. I think we actually have potential to get all the way up here on this. Okay, so if this starts to move, I'll drop down to the 10 second. If we start getting back above this high, this looks really good. It touched our point of control right here, and we have an immediate blue bar coming up. Let's see if this market has some zest to it this morning. We're looking for a confirmation by this getting up here. Until then, it's just consolidated. And then what I'll do is I'll drop to the 10 second and add to my position. Very nice. Okay, we're sitting in good profit right now. Good. Drop down to the 10-second. Beautiful. Really nice first move. Market is in a solid uptrend on the 10-second, guys. We're in it. Lock in. This is how we're going to finish the week out if this thing keeps going here. I'm just going to draw this line on the chart. Here was, this is the 50. And this is the 150 here. Okay, I'm going to get rid of my fibs. Thank you for your service. If this thing keeps going like this, it's going to be a fast-paced trend. And we might get out before that 150. We'll see here. We might see our basis start to come up here very, very shortly. Okay, here's our buy confirmation. Basis is starting to come up. Watch for the pullback. We're going to add to the position. We're not in the clear yet. This next move is going to tell everything here. Let's see if it gives it. If it doesn't even get to the 50, then we have a strong trend happening right now. Basis is rising and the market is rising currently, so this is good. There we go. There's the first target hit. That's the 50. That's good. We're going for the 150. We're going to see if we can finish on a home run today. Okay, we now have a trend line. This is the first trend line here. At this point in the game, we can go break even. So now we're risk-free. We're allowing the market to run to targets. And I am looking to add to my position. We only need one entry from here. If we can get one more entry and allow this thing to run, then we're going to finish really strong for the week. It's good. Market rising. Basis is coming up. So I am recording this this session. This was initially I was just going to do that Fibonacci trading, but the market gave some opportunities that were really good to cover. You had a really good question there, and I think it's a very important subject to talk about and cover. So we'll see how much we can get out of this trade. We're going to try to milk it. The initial trend right here, that initial one looks like it's finishing up. So now we're going to have a deeper pullback coming in somewheres here, where it'll give us a new deeper trend for a potential pattern coming in. We did break past that 50, which is great. Pullback coming here, and we might get our entry coming up. All right, there we go. On the 1 minute, uptrend is confirmed. Uptrend confirmed on the 1 minute, hitting that 70 right there. That tells us there's enough strength to get it there, which is the confirmation of the uptrend. Just like over here, you have the confirmation of a downtrend, confirmation of an uptrend there, confirmation of a downtrend here, confirmation uptrend over here. Okay, here we go. Pullback is coming right now. All right, here is my second entry in the market. We still have the ability to lose money. We're looking for a solid recovery here. Solid recovery. We're looking for that higher high to come in the market. And looking for this to get back up in here. Good. Seeing plenty of blue for the moment. All right, we're going to get multiple signals from here potentially, so this market might go sideways for a bit. You can see on the PSI, it's pulling back to our trend line here. So if we start getting below that, then there's a problem with the trend. Okay, getting a big blue. We're looking for a bounce from this level. Now here's the thing, now that this has had a deeper pullback and we have our bigger blue here, from that point we're no longer trying to get to the 150. Now we're looking to get to an equal high. So I would adjust, and I'm only looking to get to that equal high. That's it. Once we have that deeper pullback, the potential end of the move is coming. Okay, I'm now in a 1 to 3 risk to reward trade where if the market fails to make a higher high, I can only lose 500, but I do have the opportunity still to make 1500 on this. But this is where you got to be very mindful. When we start closing below this level right here, we are out. So if it starts dipping below there, very simple, we're not looking to stay in the trade anymore once it gets below there. So I'm risking very little right now in order to potentially hit my target here. Okay, market is back up. Now I go break even. I don't need to risk anything at this point. In fact, we'll just secure $100 on this trade. Okay, market's moving. I'm going to secure 500. Market is rejecting, so we might see it come back down here. At this point, I'm securing something, so I have something no matter what as we potentially reject off of this failure to make the higher high. Otherwise, let that trade run. All right, market is there. Go ahead and exit that trade, guys, for that win. We're at the target. Getting that equal to higher high right there. That's what we were looking for. Once it made that deeper pullback, now the market's showing that it's not just in a super, a fast-paced kind of move. It could still maintain along that trend. But I'm going to go ahead and finish out my weekend on a win right there. It's always good to finish on a win. All right, once it gets that deeper pullback though, that tells me we're just not in a solid uptrend. And so it could still go to target. It could come up here a little bit more, turn around and reverse, which is what it does a lot of the time. But for me, I'm going to take my win there where I had my initial position here. I had my second position here, and once that second position happens, I take that profit at that equal to just slightly higher high, as that oftentimes can be the high of the move there before it turns around and reverses. So that's just the way that I personally play it, which I think is wisdom, especially after we already got back down here to that trend line. Once you come back down to that blue, after that it's unsure. So I'll always take that first big blue triangle, but after that, I don't take multiples. I don't continue to play that. All right, guys, this was a fun morning. It's 9:55. We're all done. Go ahead, put some easy money. Let me see some easy money emojis in the chat. Everybody should be wildly in profit. Guys, we caught that buy all the way at the bottom. We saw the shift happen. We caught it perfectly. And market came right back once again to our point of control before turning around. So we had 1 point of control, 50% trade back here. We had another point of control trade right here. And we had another point of control trade right here. So that dynamic support and resistance really coming in play this morning. Make sure, if you haven't already, go back through, watch the point of control video, as well as the Fibonacci video, to understand why we're taking these initial trades, where we're taking them from. All right, you guys have an amazing weekend. Thanks for taking the time to watch this video in the classroom. Go over it multiple times and you can see a perfect example of taking a loss, turning around, taking a win, allowing trades to be able to go to target in order to maximize your profit and keeping those diamond hands. I will see you guys on Monday. Have a wonderful weekend.